Today we're going to answer some questions and go over some tips, and we're also going to talk about a possible trade setup. You don't want to miss this. G'day traders, I'm Stacy Burke from Stacy Burke Trading. I hope everybody's had a great trading week. There's been some improvements in your trading. Every single day, try to focus on 1% improvement, doing one little thing better, whether it's being patient, whether it's waiting for the best trade setups to show up, whether it's managing your stop loss, your risk, your profit targets, spotting the best trade setups. 1% improvement every single week is a massive improvement by the end of the year. Today we're going to answer some questions that I've received from different people, and we're going to go over a couple of things in terms of some strategies that I use. We're going to talk about waiting for closed candles, when to go to break even, how to identify your profit targets, timing and using the hourly, the 12 candles, but understanding the hours and how you can use that with some of your thinking in terms of the trade scenarios. And then also we're going to talk about a possible fantastic trade setup that's evolving as we speak right now. So first, waiting for closed candles. This is really important. Later on we're going to talk about smaller time frames, but it's really important to wait for the 15-minute candles to close. When you go back and do your back testing and you go bar by bar, everything is done on closed candles. What you will find time and time again, one of the tactics that the smart money use to manipulate retail traders is that they will paint a candle and make it look very tasty for a counter trend trade direction, or make it look like a pin hammer or a reversal candle, and then literally in the last 30, 20, 10 seconds of that 15-minute candle, they will completely shift it and reverse it the other way. So it's really critical to wait for closed candles. Retail traders, myself included in the past, a lot of people have told me this, they'll get in early at numbers, or they'll get in thinking that they're missing a move because they've made it look like the candle's running away, whether it's a breakout candle or a reversal candle, only to see that candle close against their fill price, and they're already underwater when that candle closes. There's no rush. If you've got the right entry, when that candle prints, let it close. If you're going to enter in, or if you wait and then you realize that it wasn't a signal, you'll be glad that you did so. So wait for closed candles. This is really important. When to go to break even? Okay, so my golden rule of thumb essentially, and this is sometimes a difficult question for yourself to answer as well, but generally speaking, if I get filled near or at a price level, round numbers, a quarter level, whatever that may be, once the market has moved into the next 25 pip increment box, if it's done so with momentum, I will often go to break even. Now, if you're taking a trade off of an extreme, off of a high or low, and I'm at the high or low of the day, and I'm confident that my trade setup is fine, I will not go to break even until that market has moved 30 or more pips away. And the reason why that is that because with the spreads, the movement inside of the quarter range, it is nothing for them to come back and tap your fill price, even though your trade is still valid and correct, to stop you at a break even. So it's important at least for them to move it up or down into the next 25 pip box at least before you go to break even. Now, if you get filled somewhere in the middle of that range, that's where the challenge is, because again, pound New Zealand, pound Australian, 3-4 pip spread, they can come back and just come far enough to, with the spread, to knock you out at break even. But again, if your trade is moving in the right direction, there's not necessarily a great degree of urgency for you to go to break even. So be aware that they will come back to stop hunt break even trades just to stop you out of the market, to ensure that you don't make money. One of the best things you can look for is that from your fill price, is there any gaps? Whenever there's gaps, those gaps will usually get filled. So the more wicks you see into the other candles that are printing and no gaps, the less likely they are to come back and hit that position again. If that trade that you're in breaks a high or a low on the opposite side, that is a highly likely area that the market can reverse and come back against you. So that is another area to consider to moving your stop to break even. So if it shifts 25 pips into the next box, or if it takes out a high or low on that 15-minute chart. So hopefully that helps. Number 3, profit targets. Generally, as a rule of thumb, most of my profit targets on a normal trading day are at least 50 pips. Now, I've talked about the pound Canadian, the pound Swiss, and the pound, sometimes adjusting those to 40 pips. But it's also important to consider where your anchor points are. Now, we haven't talked a lot about this yet, but we will. And the anchor points are the areas where, even though we may be inside of an Asian range, where the overall peaks and troughs are. So if the market has come up and made new lows, and we're inside of a template, each one of those highs or lows is an anchor point. So there's a pin or a high point there. Those are areas where the market could be also considered to be profit targets, depending on which direction you're going. So if we're working our way back up, each one of these is a potential profit target or an area for the market to move towards to even do a measured move. We haven't gotten into that as much in depth yet. We'll talk about that today on our possible trade setup, which again is not a trade recommendation, but we'll talk about a scenario that's playing out as we speak. So profit targets generally as a rule of thumb are at least 50 pips. Depending on the highs and lows of the market that you're trading in, there may be opportunities for other, and again, the boxes that the particular pair you're trading in, if it's a 50 pip box, you might be going for 100 pips. If it's a 25 pip box, you'll be going for 50. If it's a 100 pip box, it could be a 200 pip move. So we'll get a bit more in depth in a couple of the future videos, but generally speaking, pound Canadian, pound Swiss, pound 40 to at least, and occasionally 50, depending on again where the setup, how the setup plays out, because you'll often get 50 pips from top to bottom, but not necessarily hitting your fill for 50 pips. Whereas the pound Australian, pound New Zealand, pound yen, 50 pips generally is my minimum target. Timing. So something else I wanted to talk about with that 12 candle window and the hourly phenomena. There's a couple things. One is that at the end of each hour, the 45-minute candle, the fourth candle of each hour, potentially is always where you're going to see an ideal trade candle print. And if you think about that in simple terms, if you were on the hourly chart, often the close of an hourly candle confirms a trade entry on the hourly charts. But just something to have in the back of your mind is that in that session changeover between Europe and London, often if you're at the high or the low, you may get a pin or a pin hammer in that Europe changeover. If there is nothing that is a valid trade signal at numbers or coming off of numbers in that first hour, you should start thinking second hour trade and the last candle of that second hour. So the 8th candle. Just remember in your head the hourly phenomena. So the other thing that I want you to consider is that if the market breaks out in that first hour of the Europe changeover, so towards the end of Asia, it moves up an hour, and London gives a re-entry into that trade. Start thinking, we talk about 3 push patterns, we talk about 1, 2, 3 candles to the high or to the low. Think 3 hours, because again, when you get a strong move, it's going to be at least 3 hours. So if you're looking to counter trend or you're looking for a setup at 25 pip increments above Asia or below Asia, start thinking about timings. If the market goes 50 pips above and goes sideways into that third hour, start thinking the end of that third hour or even the first couple candles of the fourth hour. Okay, even though that's outside of our 12 candle window, often the market may push up and do 3 pushes into a peak for a move down, or vice versa off the bottom. It may push 3 times into a low to form a W reversal formation, but start thinking in terms of that the last candle of each hour If they're jamming them in on one side or up top, think 3 hours, 1 hour, one push, two push, three pushes, 1 hour, 2 hour, 3 hours. Okay, timings. Okay, so we're going to talk about a possible trade setup today that's playing out on the British pound. Wait for it. Japanese yen. We're going to go through that on the charts. Again, this is not a trade recommendation. Anything that you do, you're responsible for, but we're going to talk about looking at some opportunities that have set up on the daily chart that are possibly playing out today on Friday. All right, let's take a look at that.
Hi traders, Stacy Burke from Stacy Burke Trading, just continuing our discussion on a possible great example of how we can use the daily charts to identify possible trade setups. We're looking at the pound yen, and as you can see, we had the pound from August, September had been moving up, consolidated, put in a peak formation and went sideways, and then late last month in February we've broken down from 4,400, 4,500 area down to 3,750 area. And if we looked at this in terms of its rectangle formation and we were to project a possible range expansion on that, this market may not be done. It possibly still has room to fall to 3,500 and maybe even as far down as below 3,200. Now, do we know that this is a definite possibility? No, we don't, but I'm just looking at scenarios that could play out. This is a very ideal trade setup. It's similar to our template that we talked about with our weekly templates. This has now gone into a straightaway after the peak formation and the sideways rectangle that formed. And even if we just use the range expansion of the numbers themselves, which is approximately 250 pips, but even the 200 pip expansion of this takes this market, if we're in a mid-move consolidation, somewhere still down around 3,500 to 3,375. And so if we look at this and then we apply it to our 15-minute charts, we can already see that the market this morning has put in a peak formation and again 25 pips above the round number 50 pip box. 3750 is a major quarterly level. What's important is how this market will possibly respect the low of the week, and again that's at 3693, but we see that a peak formation's been put in place today and yesterday. Now this particular setup, if we go back and look at the week in general, this scenario, you'll see it again and again when we have a very, very weak market. You will see the market sometimes on a Thursday do exactly what it did yesterday. It went up and the peak formation had been put in place late US, early Asia, but then they consolidated it underneath, but it didn't really go anywhere. It took its time just working its way down and then finally dropping late in the US session before working up, and then this morning going 25 pips above the 50 pip increment box and immediately pulling back in and going sideways. So that's a very strong indication that this market may retest the low. But again, this is not a trade recommendation. Just tying in our daily analysis and looking at this, even if we do a measured range expansion of this cluster from this week, just on opens and closes, this market, if it was to break, could possibly, a measured move of that market could possibly take this down anywhere between 34.50 and 33.25. Again, this is not a trade recommendation, but again, looking at tying in our overall analysis and then using that with our intraday charts to possibly look for, if there was an opportunity for selling high, to participate in a move if it was to continue moving down towards those daily targets. Take a look at your charts. Don't just blindly jump in. If there's a sell high opportunity, then obviously that you would not want to be counter trending this market. So if this market was to show weakness, you definitely don't want to be trading in the wrong direction if this market was to continue to fall down. So hopefully you got some value out of that, traders. Keep an eye on your charts today. I think we could be in for a possibly very large ranging day on some of the British yen, Aussie dollar, and New Zealand crosses. Have a great trading day. Be disciplined, manage your downside, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.